Welcome to Kitco News. In the last few months, the gold market has seen some interesting volatility to say the least. Here to talk about his expectations for the precious metals markets in the final quarter of 2020 is Jeff Clark, precious metals analyst at goldsilver.com. Jeff, welcome back to the show.
It's great to be back with you, Niels. It's been a few months.
It's been far too long, and so much has happened since we last talked. In June, you said that investors should be overweight gold, that this was the start of something bigger. How right you were. What are your thoughts going into the final 3 months of the year? Are we still on track for higher prices? What's your thought on the consolidation that we've seen?
Well, that's exactly how I would characterize it. It is a consolidation period. Since that interview that you and I had in June, gold's made new all-time historic high prices. It's since pulled back. It's been trading in a range, consolidating, what have you, but it's still up 7 to 8% since that interview that you and I had. So I still think that there are so many reasons to own gold. I mean, there are more catalysts for gold right now, Niels, than there are hairs on my head. I mean, if you were the god of gold and you designed an environment that was conducive for gold, you couldn't dream up any more of a perfect environment than what we have right now. I mean, think about it. We have issues with the, surrounding the U.S. election. We have social unrest that's not quitting. We have concerns around the US dollar, both in the short term and the long term. We have fallout from the coronavirus. We have monetary stimulus that's still going on. And by the way, I got to mention this too. The US Treasury hinted just a week or two ago that they may lend directly to borrowers. That is technically illegal for the Fed to do. And yet, guess what? So was buying corporate bonds. And they bought corporate bonds. Corporate bonds is their third largest holding of an ETF, many of which are junk rated. They're not even investment grade rated. Then we have fiscal stimulus issues. We have negative real interest rates, vulnerable stock markets. Central banks are buying. We have inflation concerns. We have another potential black swan that could come, right? We could have a white swan, like another Warren Buffett buying Barrick Gold, for example. And by the way, on top of all that, what is next? What is Trump's next tweet going to say? So there are so many catalysts that you really have to be long gold and continue to buy and denominate a large portion of your, cash or your holdings in physical metal. I don't see any reason to change that whatsoever.
That's an impressive list. I don't think I've had anybody actually list every single factor that is driving gold, and I don't think you've left any out. It's been incredible. But like, what gets us back to 2000? Do you think? Is it just patience? Like, with everything that's happening, is it just patience? And I ask this because we have seen talk about stimulus. 1 minute it's on, 1 minute it's off. It's back on again. Maybe piecemeal stuff like this. And I'm sort of wondering, does, the long list of stuff supporting gold, but what's the catalyst to drive it back up to where it was in August?
Yeah, that's a fair question, but I mean, who really knows? The point is, there's so many potential catalysts, both big picture catalysts, but also short term things that could ignite the gold price. I mean, gold's only about 6% or so back to 2000 as you and I talk here today. So it's not that big of a jump. It could do that in a week, or give me 2 Trump tweets and we're back to 2000. So who knows what it's going to be? But put it in perspective. Look how far gold has come since its March low. It's risen a tremendous percentage. It was on quite a run. Same with silver. It's not too surprising to see, simply based on price action, to see gold consolidate, pull back, get a little more quiet here, if you will, and trade in a range until the next big catalyst ignites it. So I don't know. I would be very surprised if we're not over 2000 by the end of the year. But again, in the big picture, any dip in the price here is nothing but a buying opportunity for me. And that's because the big picture for me demands higher gold prices.
Jeff, I love your outlook on gold. What about silver, really quickly? Do you like the precious metals? What are your thoughts if we do see weaker economic growth? Is that going to weigh on silver prices?
It could. We do know historically silver has not performed well during recessions. Gold has. Silver's not performed well during stock market crashes. Gold holds up very well. Central banks buy gold, they don't buy silver. So silver is vulnerable in that specific environment. But look at the potential. Silver is roughly 42% below its all-time high still, and yet gold has made new all-time highs and is hovering near that still. So on a long-term basis, the potential for silver, especially the catch-up, if you look at it that way, could be tremendous. But in the short term, depending on what the issue is, if it's deflationary, if it's recessionary, if it's something about a poor economic growth, yes, that could temporarily weigh on silver. But again, there again, I would view that as pretty much a buying opportunity.
So do you think silver hits all time highs then? I mean, gold hit it, so do you think it's just a matter of time before silver hits it?
Yes, yes, I do think silver's headed back there. Probably not in the short term, but in the long term, I do, especially if we get an inflationary environment. Think about the two biggest rises we've seen in the silver price in modern times. One in the 1970s when we had runaway inflation, and then from 2009 to 2011 when we had the fear of inflation. That was the environment for silver's two biggest rises. We get inflation again, headline inflation, and it catches the mainstream off guard a little bit. I mean, that could be last train out of the station for silver. That would signal that it's ready to begin its big run.
Jeff, this has been fantastic. Switching gears a little bit, let's look at the mining sector. Companies are getting ready to release their third quarter earnings. What are your thoughts on the earnings season that we're going to be seeing fairly soon?
I think that the miners are going to be the biggest green on the screen for Wall Street traders and investors. And that's because in Q2, the average gold price was around 1710. In Q3, the average gold price was over $1,900 an ounce. It was 1908 to be exact. So there's a $200 an ounce rise in the gold price between Q2 and Q3. Plus, the mines are mostly back online and fully staffed from Q3 to Q2. So they really could be the big green on the screen for many Wall Street traders and people looking at earnings. So I expect earnings to be very strong in Q3 for the producers.
What do you think about investor interest? It does feel like I completely agree with you, but it does feel like investors are continue to ignore the mining sector. We haven't really heard about big run-ups, and everybody sort of knows that they're just making big piles of cash. Their expectations for margins and free cash flow just keep going up and up. Is there still value in the senior producers?
The answer to that question is what one thinks the future of the gold price is. If one thinks the gold price is going to go higher, then yes, earnings are going to continue. Free cash flow is going to continue to rise and make them very, very attractive. Remember, the gold price can rise very abruptly, while costs usually do not. Costs would go up in an inflationary environment, but costs tend to respond slower than the gold price does. And so there's going to be a greater margin there for producers as we go forward. Remember, we did have a big run up in the gold stocks with gold there from March to early August. My personal portfolio can attest to that. I was way overweight mining stocks in terms of value versus gold because of the big run that they had. So they're consolidating as well. Again, the answer is, what do you think is the future for gold for not just next month, but the next 2, 3, 4, 5 years? And that'll tell you how to invest in mining stocks.
So bottom line, do you think we should still be overweight precious metals then, gold, silver, and miners?
Well, since there are more catalysts than hairs on my head, as I said, that tells me that yes, we do need to still be overweight. I am still buying gold. I'm still buying silver. I'm still buying miners, especially on the pullbacks. But until someone can tell me that whole list I rattled off, that all of those issues are resolved, everything's
Mhm.
healthy now. The economy is growing legitimately. Everyone's getting along now. If you can convince me of that, then I'll go underweight gold. But until all those things change, I'm definitely going to remain overweight gold.
Jeff, thank you very much for joining us today. I've really enjoyed this conversation. I've really enjoyed listening to your thoughts on the precious metals markets. How can people get more information from you?
Well, I do write exclusively for goldsilver.com, and actually, you can get Mike Maloney's free book there on the website if you want. He's giving it away free now. I do post my buys and sells of mining stocks and gold and silver on my Twitter handle, which is at the Gold Advisor.
Thank you very much for joining us today. Thank you for watching Kitco News. For the latest in the precious metals markets, go to kitco.com. Stay safe and stay healthy.